All right. So welcome to Game Plan Sunday. Today is December 8th, and we're going to kick off our stock market strategy session with the crew. We're going to take a look at what happened over the past week, what's coming down the pipeline this week. How can we use that information to strategize and make some money in the markets this week? I want to thank all you guys for showing up, and we're going to go ahead and get it started. So this past week, the markets were actually, almost hitting those highs again, but we started off on a down note. Because to start off of the week, we had Trump. Trump came through, did what Trump does. Trump was on Twitter and, just told the world basically, hey, forget about a trade deal. We can wait till, next year for the trade deal. And the markets wasn't feeling that. And we had started off with a sell-off. So you guys can see the charts here. If you're on the Facebook side, you're probably not going to see the whole thing because they be cheating y'all on the screen real estate. But on our side, we can clearly see this. We had that down tick there. Boom, right? You see it goes down. It's like, okay, that's for Trump talking about forget about a trade deal. Now, remember, the markets have been juiced up for all these weeks, okay? Like all these weeks since October. You guys can see it on the charts, right? The market's been juiced up every week off of trade talk, right? Rumors of trade talks. Nothing substantial. It's just talk. We got October here on the charts. You guys can see it here all the way up to these new highs. It's been trade talk. So all of a sudden, Trump come through and say, hey, forget about it. We don't have to do a trade deal. I'm not even ready to do a trade deal, right? But you say, well, the Wall Street has been reacting towards it, doing all of this all over trade talks. And I've been telling you guys all these months that there's not going to be a trade deal because logically, it just doesn't even make sense for China to go into a trade deal with Trump where you could just wait and see if a Democrat will possibly win. And if a Democrat wins, they'll have easier terms. And, it just doesn't make any sense for them to go into it. So, again, he's, broken it down into trade deal, partial trade deal, 4-part trade deal supposed to be. But, again, we still don't even have anything in writing. It's all talk. So it's all a smoke screen. Meanwhile, behind the scenes, we have the Feds that's actually been pumping liquidity into the markets. And so that's the real reason why the market's been coming up. The Trump story, that's just, for entertainment, right? The real deal is the Feds has been injecting the monies in the market. So the money's been coming into the markets. Where's that money going? It's not going into the direct economy. It's actually going into stocks because, again, the institutions, they can't make no money off of bonds right now. Bonds is negative all the way around the world, except for the U.S. And we're like under, 2%, which, again, is, you factor in inflation, it'll be negative, right? So risk is on right now because there's nowhere else to put your money. Put it in stocks, right? The risk is on. And so these institutions, they've been buying up the stocks. And the Feds has been, doing quantitative easing at the same time. So the real deal has been, Feds are supporting. And also we have the Feds that's, basically did their last rate cut for the year. Again, we have a meeting coming up this week on Wednesday. So just know that the Feds will be speaking this Wednesday. And consensus is that there's not going to be a rate cut. And, by the looks of it, we just had some great, job numbers that just came out on Friday. I'm also sharing that opinion that, there's not going to be a rate cut anymore for 2019. We still have money just pumping into the economy. In fact, the Feds injected over $75 billion on Friday. So you say, hey, the economy is doing so great. Why is the Fed still injecting money? The Feds are supporting the economy. I think that all things are coming together to support a 2020 President Trump. OK, you have to think about it. Stock market is his pride and joy. Economic data. He's, pretty much going to be running purely off of that data. You need everything you can to support that. Wall Street supports Trump. The U.S. corporations support Trump because he's doing a favor for the U.S. corporations so they can compete with China and all these other companies out in the Asian markets that are, again, it's hard for us to compete with them. They're killing us, man. So anyhow, that's just what I believe. Again, this is what I'm seeing, because when we step back and we take a look at the fundamentals, we look at earnings, and earnings are just really not as stellar. We say, they beat earnings, as we talked about the last Game Plan Sundays. The earnings, the benchmark has been dropped. The bar has been lowered. And so because they're beating lower standards, does that mean that it's good? No, it doesn't mean that it's good. We can clearly see that the slowdown is here. So we had PMI numbers that came out. PMI numbers came out, again, recession levels. I can pull those charts up for you guys here in a second. But the PMI numbers came out and they're still recession levels. And then we had the employment numbers that came out. So the employment numbers came out, stellar employment numbers, I think over 266,000 jobs created. And we'll go over some of that. So the key thing is to remember is that the data on the surface is not the real deal. You have to dive into what's going on in the data, right? If you really want a real picture. For Wall Street printing purposes, so they can ring the bells and all that other stuff. Yeah, that's fine. But the real deal, the real economy, we'll go over some of that in a few. I'll be able to pull that up for you guys so we can see it as we talk through it. So that's basically where we at now. What's good, Dion? I see you. So basically, yeah. So the markets, again, it's not the economy. It's just one indicator. But it's going to be a major bragging right for Trump in 2020 is that, hey, for 2019, y'all said it was going to be this, it was going to be that, and the markets are hitting new highs. And so, again, we had a Thanksgiving, a feast. And, this is our first game plan Sunday back from Thanksgiving. So I hope you guys are, you've already, got your food. You already ran it off the weight. You got the excess off of you. You're ready to get back in the game, right? And then we have the Christmas rally that, Wall Street is expecting. Christmas rally, to end the year on a positive note. So if you take a look at, the previous year, we end up, the market basically had a major correction. And in this year, it's like the opposite, opposite case. And again, I think it's all to support 2020, President Trump, nomination again. So he can serve a second term, right? And that's just what it is. So we had the Fed supporting them, the Wall Street is supporting at the same time. So that's the big level view that I want to show you guys. So, and then let me actually just cover some macro issues here. We'll take a look at, let's go over the handy dandy yield curve, as it's been a minute since I showed you guys this, right? Let's take a look at it. All right, cool. We want to take a look at it from this view here. And just looking at the charts, as you guys can see, let me actually go turn my annotation to red here. All right, cool. So this is better. So we can see it better this way. All right, cool. So this was a recession. That was a recession. This was a recession. What is this? This is where we are today, right? Again, when the yields invert, okay, we get that drop like that, okay? Under the Obama years, we had the 0% interest rates, okay, cool. We got the rates to come up, and then the rates started coming back down now. So normally the projection would be that. Okay, anybody just looking at this, you don't have to be a chart technician to see where we're going. All right, anybody can see it. That's just where we're going to be headed at. So what you're seeing right now, and I wanted to show you this view here because this is the last 30 years. I want you to see it from the big view because what we're seeing now, you see the news say, oh, the yield curve is out of its inversion. And when I show you in the big charts, you can see, clearly what's going on here, right? And this always happened before the recession comes. Let me just make it bigger for you. Okay. If you're going to take a look, the gray line is the 3-month, the blue line is a 10-year. Okay. This is the Fed's basically controlling the gray one. The market's controlling the blue one. So the Feds do what they do. But if you take a look, even back here, you see how it was inverted back here. That was the warning telling you recession is coming. And then you saw that the blue line got away from the gray still. And then it did it again here before the recession happens. Okay. So it's done that before. And that's what we're seeing right now. They say, oh, it's popping out. The trend is still down. Okay. But the blue has came up above slightly. Okay. All right. But the trend is still here. And basically the Feds are supporting the economy to do everything it can to prevent a recession coming before the 2020 election. So again, everything, just think about it this way. Everything is to support President Trump 2020. Okay. So this is why the Feds are doing what they can do to keep the economy going. Recession is coming because of the debt cycles. Okay. It's not because I want it to. It's just because that's how debt works. People are borrowing money. People are spending money. But this is where it has to be. Okay. It's just a matter of timing. And how long can they hold it off, right? The key is to hold it off until he can secure 2020, presidency. And they may be successful in doing so, right? They may be. I'm not too sure. But the consensus is that they can hold it off until then. And then we have some reports from economists saying, oh, the recession is going to come in 2021, right? Again, this is the longest bull market in history. It's time for the correction. So anyway, I just want you to understand the theme of what's going on so that this will all start to make sense. You see the big picture. So anyway, that's just the yield curve here that you hear people talking about. And if I take you to today, on Friday, this is the last reports. Again, the Fed is controlling this part, all right, and then the free market controlling, the rest, right? So these are the two here. Feds are keeping these low, all right. They're suppressing them down to 1.5, and when in reality they should be higher. Okay, so anyway, that's just what you see in there. I just want to show you guys that real quick, and then I'm gonna pull. I know you guys have been waiting for this one. Okay, so this is my big Excel chart sheet that I track all this economic data here. So I just want you guys to see where we are from an economic perspective, okay? And let me try to zoom in just a tad bit more for you guys. All right. We'll zoom in like this. Okay, cool. So just taking a look quickly through these points. All right. The GDP, we had our last print, third quarter. As you see, GDP is slowing. Doesn't take a rocket scientist to see it's slowing down. Economy is slowing down. Okay. We had an uptick in inflation. Again, this is the CPI numbers. So this is the value of your currency is losing this value, right? So that's what's happening, right? Inflation is starting to come up, and then the Fed's and Powell's meetings basically giving Wall Street the consensus that they're going to do everything they can to support the economy by, further cutting rates or not cutting rates. But what they will not do is raise rates. And that's all the insurance that Wall Street needs to know for people to put on more risk, right? So they're piling up the risk, but we're at dangerous levels right now with these stocks being extremely high, right? The price of the stocks are higher than what the companies are actually even producing. So earnings, the fundamentals are not there to support the price hikes. But again, the risk is on because the Fed's just, providing the insurance, okay, that they're going to do everything they can to provide a liquidity and everything else. So anyway, but at the same time, they're causing the inflation. And see, we hit 2% back here. That's their goal, 2%. But if you guys listen to the other meetings before, what they want to see, they don't want to just see it hit 2%, but they want to see it hit 2% and they want to see it sustained. So even if we hit 2%, they're still not going to cut. They're still not going to, raise the interest rates. Right. That's what Powell said in his last meeting. So even if we go back up to the 2%, they're still not going to raise the interest rates. So, I mean, that's pretty much, I think maybe consensus is that maybe they raise interest rates one time next year, but that's very low probability. So again, this is insurance for the stock market, okay, to continue to go higher. Again, this is the yield curve. We just looked at that. I like to look at this view sometimes so you can see where we were last year, the ghost line here. That's where we were last year. This is where we are today. So you see those yields. This is interest rates, interest on your money, down, still down, okay? So it's a good view as well. Take a look at that. Wage growth. Again, we talk about the job numbers. We'll take a look at that here. In fact, let's just go ahead and pull that up real quick because that actually looks good, right? So you take a look at all of this. Unemployment numbers are low, okay? Back to the 50-year lows that we saw back in, I think it was September or whatever. So, it's basically showing that, people are more productive, right? So you got more people that's in the workspace. And then you have the job growth. And then we had some upward revisions in these past two. So they bought these all up. And then remember, they bought all of these up. Okay. And all the revisions prior, they bought all of these numbers up. So all these numbers were revised up. And then we just had this monumental print here, 266,000. And the crazy thing is that the markets went up and that was expected, though. Like, it's okay. When the markets make sense, it's easier to trade, right? We get positive economic data, then the market should respond to that. It's been kind of weird lately because that's not what we've been seeing. But anyway, this number here, job growth numbers, is actually pretty good. And that's just on the surface. You guys got to understand there's a whole lot more to it than just the print. Okay, so in the print, you had GM workers that came back into the place. These are people that they were already working. They just took off to go on strike. So they had over 45,000, 46,000 people that came back into these numbers. So, I mean, again, you got to really discount that. I also saw in the data, like a lot of these jobs are like healthcare jobs, right? So you got federal jobs. Remember, we had the Census Bureau that has temporary jobs until the 2020 census is actually completed. So it's a lot of temporary jobs, a lot of part-time jobs, right? And then I also saw that it's over 46% of people over the age of 50 that's making up these jobs. So when you take a look at like the underline of the numbers, so you're saying people above the age of 50, a lot of people above the age of 50 are now making up for these numbers that we're seeing. So these numbers here, I want to say they say over 46% of those people are people above the age of 50. And that's a lot, right? And that's really showing you that people that should be retiring, right? They should be freaking, they're older, so they should be retiring, are coming back to the workforce, right? And then also you have to think about the quality of the job. So it's one thing to print a lot of job numbers, but the quality of the jobs are low. Then what good does it make, right? And I'll give you guys a case in point, and you can check this stuff out in your real economy. Well, I say taking social indicators by living your life, right? And I'll just give you guys an example in a second. But basically, with these numbers here, you have a lot of people working 2 to 3 jobs also, because these companies are cutting benefits and these companies are cutting hours, right? And so this is why the PMI stuff is important, right? So we'll go over some of this. I'll explain it to you here, okay? So the companies are cutting benefits and they're cutting hours. And so more jobs are being created as far as the numbers, because one person can register for 2 to 3 jobs. So you also have that to build into it. So the numbers are not exactly black and white. I just want you to understand, for Wall Street purposes, yeah, you was going to expect the market to go up because of the print. But deep down, the economy, you had to see what's going on. So case in point, I was at my local grocery at Harris Teeter and Harris Teeter Food Line. I was over at Food Line, and I was at the deli, and there was a kid that was there. He was like, "Oh, I can't service you because we're closed. They cut our hours." And I was like, "Huh?" So I stepped closer, and because he was coming towards me, and he was like, "Yeah, man, they cut our hours, and so we're working short or whatever." So he was like closing up the shop. He was like, "Well, we're hoping that they'll open our hours, coming up in the next 2 weeks, right?" And it's like, okay, that's crazy. But I've been hearing a lot of people talking about their hours have been cut at these jobs. So ask your people. You may know somebody who's working. If they're working, ask them how their hours are doing, right? Because I posted an article earlier about Bloomberg, posted about how these traders, tens of thousands of jobs of traders are being cut. And a lot of that is from AI, artificial intelligence. And as you guys know, in the markets, we're trading against algos. And the algos, there's no way you can beat an algo as a human. Just forget about it, right? But you have these companies like TD Ameritrade, Schwab, consolidating because they're not even making money off of, retail trading no more. Commissions are down to zero, right? So they had to find ways. Corporations got to find ways to stay, competitive and efficient. And there's no better efficient, tool than AI. AI is the thing. So AI is replacing. They was talking about on Bloomberg how AI is already placing tens of thousands of jobs. We have lots of jobs. I think they just announced some new jobs from banks being cut right now. So the financial markets is being hit also. Yeah, traders, especially traders, are being cut because the robots can just trade better than humans, right? So these are things that's important to take a look at. And at the same time, these companies are taking money, they're getting money from the feds, and they're going to, do what they have to do to develop better, technology and stuff like that. So that's also built into these numbers. And also, last key thing to remember about these jobs numbers is that what season is it, right? What season is it right now, right? It's holiday season, right? So you have Thanksgiving, you have Christmas. A lot of the jobs that's in here, again, these are part-time, they're seasonal jobs. These are just temporary because companies are expecting higher sales margins, right? And so because of that, they have to, prepare for it. So they hire a lot of people. So that's also, what you're seeing in here. But the PMI numbers are telling us a different story. This is the PMI numbers from the ISM, right? And the red line is the consensus number. Above 50 is expansion. That means the economy is growing. Under 50 means that we're contracting. These are recessionary levels, right? And this is a leading indicator just showing us like in the future, like what to expect, okay? But the PMI numbers is basically these manufacturing companies that make you produce things. But when they order more things, that's because they're selling at a rapid rate. So you're selling more, there's a higher demand for your goods. You need to buy more raw goods, right? And so when we see these numbers for an expanding economy, these numbers would be growing because they're selling more. So they quite naturally got to order more, raw goods. But they have declined and they've been slowing down. And you guys can see the trend is just, disastrous here, right? So manufacturing is getting murdered, okay? So that's what we're seeing here with the PMI numbers as far as us producing raw goods, right? And so again, this is, economic data here that's, definitely sensitive, to the markets, right? And again, you have the store closings, openings and closings are still, up there, above this line. These are all the, see all those jobs that's been lost. Like, look at that. That's crazy. So we passed last year numbers at here, 17 weeks into the year. These are the stores that are closing. Okay. And the retail, sector is basically getting smacked up, right? All these jobs are being shut down. And you see this, red line, these are the ones that's being opening. So last year, this is the limits here. So we reached that limit here. At the 33 weeks, we finally surpassed all the jobs that we created from, stores that were open from last year. And so we just got a small portion that was been opening this year, which is good, but this is worse. So there's more stores that are closing. So you can see there's more stores closing than it's been opening. So anyway, that just kind of give you, an idea of what's going on with that. Okay, so let me actually just bring that to a close here, and then we get to what we have to do to make this swift for you guys. Save that. All right. So here we are today. We have the markets chasing those highs at 31.58. Excuse me. All right, so we have the markets. This is the S&P 500 chasing those levels. Let's go back to my yellow colors here. Here we go. Those last week highs. We didn't quite make it last week, but it was almost there, short of it. There's still potential. Okay, if we take a look at my ready, aim, fire, I'll show you guys this real quick. All right, so this is out of bounds levels. We was at those out of bound levels here. That means it's overbought. And we're down here. So, and we have a little buy trigger here. So there's a potential that we can go back into this zone here. There's a potential. If that was to happen, then we'll be forming a double top pattern as I'll be, looking for that formation to come through. It's not quite there yet, but this is something that, again, what could print into the markets this week. Now, as of right now, what we're looking at, the markets are down slightly here. As you guys can see, markets are down, and I don't really know what's driving this. I do know that there was reports about North Korea, issues with North Korea, that's popping up right now, which that's interesting. If you guys traded with us, I think a year or 2 years ago, then you remember every time there was news about North Korea launching missiles, the markets would puke. So it'd be interesting if that risk pops back into the place. I saw Trump was tweeting about passive aggressive, tone to Kim Jong-un that, hey, you know what's best for your economy, so you might want to pipe down, player. That's kind of what he was basically saying on Twitter, right? That's aggressive, because us men, that's how we understand that that's a threat, right? But it's more passive. It's not like all, full of excitement and things like that. But something about the denuclearization or whatever you call it, them with the nukes. North Korea is like, forget it. We're going to go back doing what we were doing. So that's from my understanding. It may be, if y'all find out something, y'all let me know what's popping right now. But that's the last thing that I've heard. So anyway, but with the S&P 500 being this high, I still don't like these highs. Like, really, remember, the key is to buy low, sell high. That's like for that's far. Okay. Thank you, Dion. So the key is to buy low and to sell high. So we want to buy low, sell high. The market's at highs. Who's buying at these highs, right? I don't know, right? So again, somebody's buying at these highs, but this is not the best place to be long because, again, it's just treacherous right now. But people are doing it anyway because the Feds is providing that security. But not Walmart, but Wall Street. Wall Street gets a little irrational. So let's actually pull up the handy dandy VIX. And the VIX indicator is our fear gauge. So we can actually see when greed and fear, we can see the greed and fear. And we've been talking about this for a little while here. We have prints, we have levels as printed in the place. Red line is a floor, okay? When we hit these levels, this is complacency setting in and you will get that pop, okay? You get that pop to the upside, and that's fear coming into the market. So when they get overly complacent, right, they get greedy, as Uncle Warren Buffett says, when they get greedy, that's when it gets that rip, right? It gets that rip. It goes in the opposite direction. So, okay, let's take a look here. All right. Thank you. So, yeah, so we've seen, I just showed you all those levels in the past. I want to show you the levels closer up here. The markets hit those new highs, and we were already anticipating that it was going to correct because we hit our levels here. And again, I compute these levels years back, and these are definitely great targets. But you see, when the market breached this level here, okay, this shook out confidence. So those people that was like actually looking to play the market short, just like, I got to get out of here. It broke, right? So the confidence was shaken. Once the confidence shook, look how it rips up. You see, this is what the algos do to you. So it's been difficult to kind of trade in the situation because you kind of know what's going on, but you try to stick with your trading plan if you can, right? If you haven't breached your levels of exiting, then hold on because the reward is just a day away, right? The reward may be a day away. But if you hit your targets, then, follow your trading plan and get out of the trades, right? But you clearly see how the confidence was broken when it hit these levels. Like, wow, they really going to go down to these levels? And then it hit that level before it, popped up. And, again, it did that big pop there. Markets went crazy up. The VIX went crazy up. So if you were still holding those VIX trades or anything short, then that was a good, nice pop off. Now, a lot of new traders make an error of, getting in at highs, right? And so you don't want to get in the highs. You're supposed to be in these moves before they take off, okay? So when you get in, you get excited, you see the print, you're like, oh, let me go in and buy the VIX. And then, it didn't work out for me the same way that Pierre was telling me, right? So anyhow, you have to see, these levels, this is good. This is what we pay attention to when we build it into the trading plans. Anyhow, so we got that little rip there. And then it's settling down now. So it's coming back to settle down some more. And, I do have a trigger that says that, hey, this may come down some more, right? And so that's going to be interesting to see if that's going to come down or not. But normally when these levels start to elevate, they normally stay elevated, right? They stay elevated in that zone like that. They normally stay elevated. Again, it looks like impeachment talks are not working. Okay, so if the impeachment talks are working, then you'll see the stock market sell off. That's not happening. So whatever's happening with impeachment talks, normally the money is going to let you know if it's something real, right, or something fake. So Wall Street not moving. I don't think they have anything. You got to remember, even if they do the impeachment through the House, then they still got to go through the Senate. The Senate is controlled by the Republicans. So again, it's nothing substantial just yet. But if that was to happen, then that would be catalyst for this VIX to continue to go up. And as we just talked about, that'll be a catalyst for gold. We just talked about North Korea coming back on the scenes. It's going to be interesting to see how the markets behave because it's been quite some time. But if you guys trading with us a year ago, 2 years ago, whenever it was, when North Korea was making the headlines every week, the markets was tanking, VIX was just popping. So it's going to be interesting to see how that plays out. That's what I'm looking for this week. Also, remember we had the Feds. They're going to be speaking on Wednesday. Again, the consensus is that the Feds are not going to be cutting rates. They're just going to be, they're going to put a pause on it. And that's expected. So I don't really expect much movement out of the markets on that. And plus with the high jobs data coming in, I think they're pretty confident to not, cut rates anymore. They're already pumping liquidity. They're already doing QE4 already to support the market. So as Powell said in his last meeting, he was saying how, hey, we're doing our job to support the markets. It's up to Trump to do whatever he has to do with trade. I mean, that's pretty much what he was saying. I expect the same kind of rhetoric from this meeting on Wednesday. So we'll be in tune with that. All right. So with that being said, we see where we are with the VIX. Okay. And we see where we are with the S&P 500. Okay. Oil. My bad. I do want to talk about oil here. So let's pull up oil. All right. So we do have oil. And this is something that we posted in the group this past week. OG Ron is in the group. What's good, Ron? I think Ron has some headlines that he printed, published in the group so that everybody can see. So make sure y'all check out when your colleagues is posting. You know what I'm saying? Like, this is group work, teamwork, make the dream work. I can't see it all. right? So we all help each other. Each one teach one. That's what it's all about. All right. So oil was in a very interesting situation. So I'll just pull up charts like this so you guys can see what I was seeing in oil and what I'm seeing in oil is that we have a squeeze set up on oil, which is interesting. We have a double squeeze, right? We have a big picture squeeze. So we got some pent up energy on a weekly chart. That's the squeeze right here. It's going to have to blow. It's got to make a decision, right? But then we also have, squeeze popping here on a daily, right? And the daily is already moving above, starting to move above its the 618 retracement that I have here. Let me just pull it back some. So this was the resistant level. It's already moved above its moving averages, okay? And so the 200 was the major level here. That 200, the price is now above that. Now they have a Fibonacci target here, the 618 retracement, and we've also moved above that. And we have squeeze here, and then we have the trend that's moving up, and buy triggers that's in here as well. So it's gonna be really interesting to see oil move. I'm expecting oil to move up. I do have hard targets here around $64. This is maybe rounded up to 65 because the markets like to hit those whole numbers. Posted a new article today. OPEC is cutting production. Okay, so there we go. So thank you, Ron. So yeah, basically we have the charts here. That's the technicals. We can see the technicals are aligning with a bullish move up in oil. Ron said there was an article posted by the OPEC. For you guys who don't know the OPEC, they control pretty much the oil markets. It's not coming from the U.S. That's Saudi Arabia and those countries plus Russia. And they have actually announced that they're going to be cutting production. So if they cut oil production, that means they're cutting supply. All right. When they cut the supply, that makes the prices rise. And so, again, that's a story to go behind what we're seeing in the technicals to support this idea that oil is going to go up to hit these targets that I got up above. Okay. And so this is where I'm looking at for a target to the north side of oil. Again, we have the technical set up. We have a story. We have to see how it plays out. But, risk on in oil, if you guys see this energy watch list I have over here, pretty much you can take any of these names on the list and look for those areas for some exposure in oil. I normally play HES, EOG, MPC, CVX, pretty much the big names is what you kind of want to go for. But anyway, I am looking at those. And, it's interesting about oil. So you got to understand, let me actually go back here. I want to just cover something real quick. Actually, let me go on a monthly chart. Okay. All right. So let me go back on a weekly. All right. So here we go. Oil. What's interesting on oil is that the support levels down here on a weekly. Let's pull this up here. All right. So the 200 moving average is basically that support. All right. And we already know what the price can be. Right. And this right here is the last low. And this level right here is a great place for investors to buy in at. This is a good buying point for this, right? It can go either way. It can get rejected. But the thing is that you have to remember oil is also factored into inflation, okay? And remember the Fed is trying to hit that 2% inflation target, and they want to sustain in that 2%. But oil is a major thing in inflation, okay? Because that price, everything must be transported to you. That's oil cost, like fuel costs, right? Gasoline prices have been really low. The market's been able to go high without the dangers from without inflation, really being present here, right? So it's like, oh, is inflation dead? Well, oil has been pretty much suppressed, right? We had that major drop. That's really good. And oil has been chopping around. It's been tightening itself up into the squeeze, but it's getting ready to make a move. So it's getting ready for a breakout. I'm expecting it for it to break out to the north. It could break out to the south, but the technicals are showing us that it should break out to the north. Now, oil breaks out, then inflation goes up. Okay. So inflation goes up because the cost of getting things to you goes up. Either the corporations eat it up or they pass it on to you in the pricing of the goods, which that's interesting as well. And that could be a supporting factor for gold, but I'm not too sure if gold is really ready to rally just yet. I think that gold could possibly still move down some more to probably about the 1400 level. Let me pull it up real quick. All right, so we do have a weekly squeeze that we're entering into right now. That's the big picture. And that just may be, we may have a little pennant play going on in here. on a big time scale. But let's take a look at the daily. And on the daily here, gold is in the squeeze, but I do have a sell trigger on it. All right, interesting. It's not a bad thing really because oil is still up for the year, right? But it is not quite clear in this little zone here. Okay, we are going into a squeeze, so it doesn't mean the squeeze is going to fire off. It could chop around a little bit around these levels, it may go down, right? So not ready to buy gold again, not just yet. But I think a case for gold is coming in, and gold just very well may hit that 1400 low here. Let me show you. If it could come down to this level here, and that's an even better buy-in point for gold. Gold again is pretty high for the year, but you know, again, if the squeeze fires short on gold and it come down to the 1400, I would expect a major rally to come into it at that buy-in point. Okay, so that's gold. What else? Interesting. I was looking at the consumer stocks. Looking at the consumer stocks here. XLY. Let's take a look at the consumer discretionary. And in the daily's not really showing us much here, but you can see that it's narrowing down. It looked like an ascending triangle that's formulating here. There was a squeeze that fired, right? But it really didn't do much, okay? Came up just a little bit, and then it's coming down and still chopping around. But if you dial back on a weekly, right, we do have a weekly squeeze on consumer discretionary. Not quite too sure which direction it's going to go in. But it's looking like, again, we have some bullish momentum here, but it's still looking like it's a little over, getting to the overbought territory. So I want to see how this plays out. I don't think we're going to get any kind of direction on this anytime in the beginning of this week. We'll probably after the Fed speak out and have a little more clarity on that, but definitely paying attention to, you know, this area here on consumer discretionary stocks, right? Also, you have consumer staples that's you know, in a squeeze, in a bullish squeeze, if you will. It is overbought again, you know, so it's like it's a little dangerous. It's a squeeze, but it's a little overbought. Who wants to buy at these highs? I don't really know, but the squeeze itself is already fired off on a daily. So the inside squeeze has already popped off, and it's showing us that it's overbought. It's showing us here that it's overbought, so it should get some relief back here. Question is, if it comes back, falls down to the 8 or the 9 moving average, will that hold and just move sideways until it makes the case for the big squeeze to fire off, or will it fall all the way back down, right? These are ideas that I'm actually looking at. So I need to see where we're going at with those, but they do have squeezes on the bigger time frames. Another interesting situation I was looking at was defense. So defense, let me see. Defense sector also is in a squeeze. Now that's interesting because it's almost forming like a cup and handle situation here. All right. And again, it's the bigger time frame is showing us some bullish traction. It's coming down a little bit here on a bullish, but that's a good support zone. So let's see. All right. We just had a new highs not too long ago at 112, and we're still close to that point here in defense. And so we're looking at about a 115 target to the upside. And price is actually very fairly priced here. So I think that is a good place for investors to get into. Again, you see that you can see it could have been a double bottom setup or cup and handle all in one. But if you dial into the individual names like, let's see, Raytheon, it's also, you know, showing us that if we're looking on a daily here, the chart itself is clearly bullish. Okay. Clearly bullish chart trading above its moving averages. We do have, you know, some triggers in here that says to the upside, suggesting to the upside. We do have the squeeze in here. We want to see how that momentum changes. So again, I think we may get some direction on these as early as tomorrow. So yeah, I mean, that may be something that I'll look to the upside as well. Okay, so that's pretty much what's on my forecast for right now. I'll take some things from you guys, and then we'll go ahead and bring the session to a close. Anything that you guys are looking at, Dustin, Experience was good, my man. Kareem, Mia X, OG Ron B. I know Ron got some patterns for us. What's good, Dion? Debt cycles and tax cuts. That's right. That's right. You got it, please. No. Yeah, so you know your cycles. That's what's up. What's good, Abel? I see you guys. COP. All right. So this is going to piggyback off of the oil idea. See ConocoPhillips. All right. And again, those are more counter trend trades in the oil sector here, but I do like this one here. Like if you look at this chart on the weekly, Ron, we saw it come down to the 200. You know, it breached that level that gave investors confidence to enter at this level, right? And then we see the price come back up above. They sold off at these tops. That 200 supported it again. They rallied back up, and now they cleared the 100. It was clearing the 100 on the weekly. So again, we want to see if we can come back above that. But that's a nice counter trend setup there, and that's also could have been a head and shoulders there, right? Where you get that move there. That's on a weekly time frame. So yeah, it's on a daily. We see that it's clearing our 200, and that's what you want to see, right? We want to see it do clear that, and it's clearing that, and so I do. I like it to the positive side. Let's see if we can get some levels up above for you guys real quick. If we take this swing high to that swing low, actually let's do from this swing to this swing. Since it's so close to that one, actually let me take this peak to that peak. We'll take this peak here to that peak, to that low, and we're looking at about $66 target to the upside. ADM might be a little extended on the daily. Dustin, ADM. Let's see. Oh, OG Mark in the building. That's what's up. All right. ADM. I like this chart here. Don't know what the options look like, but yeah, this is another bullish setup. Got a little bit of space at the top. Say about 45 to the top here. We had a buy trigger that's in there. We got the squeeze still intact. Trend is coming up, and the levels that I got here supporting about a $45 target at the top of that. That's for that swing. Let me just take a bigger swing on that real quick before I finish that one up for you. We'll take this swing to that swing, and okay, we got that makes that level. That's a confluence on that level at $44, and that puts us at that $45, $46 target. So we'll do two swings on that. Nice little cup and handle setup. Setup on MER. Okay, so you got a cup and handle setup on that one. Let's take a look at that real quick. I'm just flying through them real quick, you guys. I don't want to keep you too long. We're already at our time limit. So that's an interesting one. Ron, we want to see that clear. This 200 moving average. It's a key level here. But nice bull flag there. Bull pennant flag. So you can see that go up. Let me give you some levels real quick. Bingo, $27 target on the first level. Mark Walmart. All right. Let's see what we got on Wally World. All right, this is going to be the last one. Okay. So Wally World, again, just looking at the chart, I like these levels here that we have as, again, at the oversold levels, right? So it's overly sold. Then that means that investors are good with buying at these levels, right? So that's a good buy level. There's an extended squeeze. I don't like the extended squeezes, but we saw it make that dip and momentum look as if it's going to shift. If I take a look at the stochastics, we can see the momentum shifting upwards. And then we see the trend shifting upwards as well. So that supports the idea that we make it to the upside. Let me get us some new targets here because that other target has been breached. Still holding it here as a floor. But I have the moving averages to hold that for us. So I'll just remove that for real quick. And we'll take this swing high to this low. And we're still supporting that 122 level. We got that overlay of the 618. But, for a real nice rally, we would like to see that thing get up to. So this is the first, resistance level. And then we would like to see it get up to the 127 for the full play. So that's what I like for that. Okay, Ron, you're pushing it, Ron. We'll do one more. All right, we'll do STT. We'll do STT. This is the last one. All right. Okay, it's trading above its moving averages. I don't have any levels up above here, so I can't use Fibonacci for this one. State Street. Let's see. Oh, okay, but you know what? I can use the weekly chart. All right, so this is why it's important to use multiple time frames. This is why we do this, because as you guys see on the daily chart, you can't see that resistance up ahead. I don't have Fibonacci levels that can really reach that high. I can probably take a swing from this high to this low here, and let's see. That may give us about an 84, but I get a better level here when we actually take a look at this 200 moving average. So this 200 moving average right here is a key resistance level. And then if we take a look at the oversold, overbought territory, it is clearly way overbought. And so, this may be a good point for you to short this one at, Ron. Look for some shorts in there. If you see any weakness, I would like to look at some shorts into that one just because it's overly bought and it's up against that 200 moving average. So I would take the opposite side of that one. We'll see how it goes. On the daily, you may get an immediate move, but it's still at these overbought territories. See how it plays out, man. But I would like to take that for some shorts if I can. We see a setup goes in there. Walmart does well in recessions. What's Walmart trading at right now? I didn't even see the price on Walmart. Excuse me. That's $119. So $119.78. For the immediate term, we're looking at a 122 target to the upside. At the first resistance level before a pullback could, show up, or may blow up through those targets and hit that 127 to extension. So that's what we're looking at for that. Again, that's what I got for you guys today, and I definitely want to thank you guys for showing up. Listen, I think we're going to do. Understand it's Christmas season, so we'll do either one or two more, game plan sessions. You guys let me know if you want to do two, and we'll do two more. I know we got next week on the schedule. So we'll be back at the same place, same time, 7 p.m. Bring a friend. Please bring a friend. Make sure you spread the good news out there. And for you guys that don't know, man, listen, Wallstreet Jackboyz, the website, we have a beautiful professional website. We have courses available that's there. We have our course that, our training there. We have lots of great things that's on the site. It's professional. Take a look at it. It's not just a YouTube page where random people are just telling you this, that, and the third. We invest money, spend money to give you guys the best experience. I definitely ask that you guys give back. And the way that you can give back is simply by going to the Facebook page, giving a like and a rating, a review. If you gain any value from what we deliver here at Wallstreet Jackboyz, just give a rating to let the world know, hey, these guys know what they're doing. These guys have a great, platform. Just let the world know. That's your way to give back. You don't have to give any money or anything like that. Just give us a rating. Star. I do ask that of you guys. Make sure you subscribe so that whenever we post, that you get the notifications. You know what I'm saying? So that's one of the things is that you want to get the notifications, right? And when we post, you might not be getting the notifications if you're not plugged in, right? And let me actually see if I can pull it up for you because I know you were just asking about it, Dustin. You just go to the Facebook webpage. So some of you guys are in the group on Facebook, but we also have the business page. And so that's what we're talking about. If you're not in the group, you definitely want to be in the group because that's where it go down at. And the group is free. So definitely make sure you get in the group, man, because the group, it goes down. That's where all the setups is in there. I'm active in there, but you got your peers. You got Dustin, Ron, Mark, Mia. You got everybody that's in there posting, ideas, trade ideas. So much going on. One person just can't count it all, right? So that's why we have a team. Teamwork is important. Let's see here if I can show you guys on this screen. Yeah, so if you just go here to the, just look up Wallstreet Jackboyz, right? And you'll pull up the page here. This is the business page. And you see my beautiful face right there, okay? Just showing you guys what we got popping off right there. But you can just go to these little things over here and you see it's showing us right now. Hey, we're live. If you're subscribed, all you got to do is go to like this page. And then you can click follow. And as you see on my settings, I have it see first in my news feed. So whenever there's a post from Wallstreet Jackboyz, I will get the notification. Facebook has this algo thing where sometimes when we're posting, you guys are not getting the notifications because you have to turn it on. So just make sure you turn on your notifications so that whenever we do post, whether it's from any other social media site, that you're actually getting whatever it is that we're posting, so you get that, right? Because there's a lot of garbage on Facebook and you want to get the important stuff. And we try to stick to posting the important things, okay? So you can go to the review section here. Dustin, right there. It says reviews, and you can just leave one, and you see, this is the one that Ron left here on the page this past week. Thank you, OG Ron. And then I actually did a nice thing that we're actually posting, so we're gonna let the world see. Hey, these are the reviews you guys have. And so we put this nice little thing together. Let me see if I can actually pull it up here. Where again, we have lots of stuff that's just posting up here, right? But this is right here. This is a nice little post that we just went in. That's a real review. Okay, it's a real review. We didn't make it up. It's real. But we just actually put it in this way so that people on the Instagram can see it and everything else. So again, if you're not on the Instagram, get on the Instagram. We're trying to, get, in touch with all this technology. Everything is changing. When we started Wallstreet Jackboyz, a lot of stuff didn't exist. We didn't have zero commissions and stuff like that. And so a lot of people that's breaking into the space and becoming YouTube stars and stuff like that. And so it makes the marketplace is getting very saturated now. So we want to basically, do what we do, continue to provide, high quality information and services to you guys. And I definitely take any feedback that you guys have. So definitely leave that. I would definitely appreciate it. But so yeah, that's what we have here for today. We'll catch up next week. And, in the markets and the group, any other questions, anything you guys hit us up, let me know. For that, we'll go ahead and bring the session to a close. See y'all guys in the markets. Peace.